Ladies and gentlemen, good day and welcome to Laurus Lab Limited Q3 FY’25 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star then 0 on your touchtone phone. I now hand the conference over to Mr. Nitin Agarwal from DAM Capital Advisors Limited. Thank you and over to you, sir.
Thanks, Steve. Hi, good afternoon, everyone, and a very warm welcome to Laurus Labs Q3 FY’25 earnings call hosted by DAM Capital Advisors Limited. On the call today, we have representing Laurus Lab Management, Dr. Satyanarayan Chava, Founder and CEO, Mr. V.V. Ravi Kumar, Executive Director and CFO, and Mr. Vivek Kumar, EVP Investor Relations. I will hand over the call to the management team to make the opening remarks and we'll open the floor for questions. Dr. Chava, please go ahead, sir.
Thank you, Nitin, for organizing this call. Good afternoon to all our stakeholders. We continue to demonstrate our unique platform capabilities for some of the difficult to make small molecules and effectively addressing the evolving needs of our customers. We're delivering on our key strategic priorities and successfully executing on the major pipelines what we have. Interestingly, the strong progress we are making on the CDMO-CMO business increases the confidence in our ability to achieve long-term success and create sustainable value for our stakeholders. We are applying our important platform technologies into some of the advanced clinical projects, which we believe have significant commercial potential. And we are further augmenting it with value-creating business development efforts like new small molecule, high-potent R&D center, which elevates our one-stop development and manufacturing service capability with our innovators, and parallelly enhancing our business teams across the globe. We also recently announced a strategic investment by 8 crores into our biotech arm. This new development further expands our efforts towards building commercial scale sustainable manufacturing capability, which will focus on creating large scale microbial precision fermentation capacity, as well as enhancing our enzymatic engineering applications as well. I would say through continuing excellent scientific and operational execution, we are achieving significant milestones for our company and also to our customers. Moving on to our financial results, our Q3 operating results have progressively improved and we delivered strong growth along the continued resilience in our financial health. For the current quarter, we delivered revenue of 1,415 crores. Strong growth is driven by robust demand in our CDMO business, supported by healthy performance of formulation division. The growth was partially offset by lower offtake in our API business. Gross margins were healthy and maintained well above 50% for the last several quarters, and EBITDA margins increased to 21% following better operating leverage and then product mix. Healthy commercial execution is our top priority, and our performance remains well on track to deliver full year growth with the revenues accelerating in the near term. To begin, I would like to share key updates on our CDMO business. These divisions have continued robust demand for its commercial offerings, and coupled with strong operational performance, we recorded highest quarterly sales for CDMO division in the last 8 quarters, close to 400 crores. On 9-month basis, CDMO division recorded 33% growth, reflecting continued uptake with our new assets ramping up. I would say the divisional portfolio continues to shift towards high-value complex small molecules. We also saw encouraging RFPs and continue to see signing an early to mid-stage projects involving complex chemistry. This momentum is partially enabled by increasing collaboration with our new R&D center with new big pharma partners. Additionally, we are actively promoting our BD efforts to successfully deliver clinical projects to broaden project pipeline for long-term accelerated growth. The broader outlook for CDMO industry with small molecules is positive, and we remain committed to our 2025 growth outlook, supported by scheduled project deliveries for a few late-stage projects in the Q4. We're working on over 90 active projects, mostly in human health and also some in the animal health and crop protection as well. In the generic APIs, we reported revenues of 531 crores with a decline of 7%. This was mainly due to lower volume offtake in ARV APIs. For 9 months, the business was more or less very stable, decline slightly about 3%. The soft ARV performance was essentially due to prioritized capacity allocations towards high-yielding long-term business opportunities. Having said that, we would like to reassure that our order book in ARV is healthy, and Laurus will fulfill all confirmed orders and contractual obligations. Also, we have indicated in previous calls that our combined ARV performance, APIs and formulations, we have done better than over the last year and stabilizing franchise revenues. On the non-ARV portfolio, we have seen some sequential recovery as part of ongoing strategic initiatives. We continue to work towards expanding our CMO offerings in small molecule APIs. Overall, we see API growth returning next year with positive order book what we have. During the 9-month period, we filed 4 DMFs, 3 in non-ARV category. With this, the total number of DMFs filed is 87. In our formulation division, we delivered strong progression in Q3, improving our year-to-date performance. Overall revenues for the quarter were 436 crores. For 9 months, we have returned to growth of about 5%. ARV business and developed market business portfolio increased on higher activity. We have a couple of ANDA launches that we expect to provide meaningful growth in the next financial year. Cumulatively, we have a total of 43 ANDAs filed to date. Of this, we have a total 21 final approvals and 14 tentative approvals. We continue to have diverse portfolio and pipeline, including products franchisee comprising of ARV, cardiovascular, diabetes, and CNS, apart from gastrointestinal as well. I'm also pleased to report that our collaboration with Karka is progressing well. We have already initiated the validation of few products under the new CMO agreement for integrated generic contract manufacturing. On the R&D front, we are spending about 5% of our sales for the 9 months of the current financial year. We continue to invest in portfolio with product-specific approaches based on complexity and scale challenges. While coming to Laurus Bio, this division reported Q3 sales of 48 crores, the growth of 14% year-on-year. If you look at the 9 months performance, the underlying growth is very healthy, excluding the impact of advanced shipment last year. And also we discontinued some low-margin non-core nutrition business. Q3 continued to see increased customer pipeline with AOF, animal origin-free ingredients, and the CDMO customer base increased significantly. We are further expanding our R&D capacity with the installation of high-throughput systems to meet our increasing demand of our R&D services. Regarding our plan to set up a large-scale fermentation capacity in Vizag, we are pleased to join forces with 8 Roads as our partner. We believe our strong collaboration will enable us to expand and accelerate high-quality CDMO services capability to global partners. The proposed investment will more than double our fermentation capacity, and we expect it to be ready by end of calendar year 2026. Let me share briefly on quality side. In 9 months, the company underwent close to 120 quality audits by multiple drug regulatory agencies and also customers. Company has successfully passed this audit without any critical findings. To conclude, I want to again acknowledge the focus and commitment of our team. Based on our continued progress across diverse portfolio and pipeline projects, we are more confident about our long-term future and value creation for our stakeholders in the coming years. With that, I'd like to hand it over to Ravi to share some financial highlights.
Thank you, Doctor, and very warm welcome to everyone on our Quarter 3 and 9 months FY'25 earnings call. Total income from operation for 9 months is around 3,834 crores with a growth of 6%. For the quarter, we have done 14-15 crores with a growth of 18% year-on-year. The fundamentals of our business have remained healthy, led by order book position and continued progress in CDMO business. Gross margins maintained healthy level for quarter 3, which came at 56.9%, and for 9 months, 55.8%, mainly due to better product mix as well as process improvements done in some of the key large volume APIs. Our EBITDA for quarter 3 stands at 285 crore, with EBITDA margin at 20.1%, which has progressively improved. For 9 months, EBITDA came at 638 crores with a margin of 16.6%. This is versus 15% in last year. The margins are suppressed due to continued operational deleverage, even though some of the assets may have started to ramp up. We expect quarter 4 will be ramp up further. Our profit after tax for quarter 3 is at 92 crores and for 9 months at 125 crores. Our ROCE was 6.8% due to lower operating results and continued capex investments towards growth projects. On the capex front, we invested close to 186 crores for the quarter and 448 crores for 9 months FY'25. Our net debt stood at 2,766 crores and debt to EBITDA is around 3.1 versus 3.4 in the last quarter. As we have articulated in the past, we are expecting gradual deleveraging following acceleration and operating performance in the near term. On the capital allocation front, our strategy remains unchanged and we will continue to prioritize investment into high value business segments like CDMO. You can refer to our IR presentation for more details. With this, I would request the moderator to open the lines for the question and answers.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handset while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. In order to ensure that the management is able to answer questions from all participants, please limit your questions to 2 or 1 per participant. First question is from the line of Sajal Kapoor from Anti-Fragile Thinking. Please go ahead.
Yeah, thanks. Good afternoon, everyone. First question is related to Laurus Bio. Recently, a 59-year-old female patient from Netherlands traveled to India for CAR T cell therapy, and her treatment was successful. And of course, this is a wonderful outcome for Indian scientists, doctors, and healthcare infrastructure in the country in particular. And I'm, of course, so proud to be an investor in ImmunoAct through Laurus Labs, of course. My question is about both ImmunoAct and our gene therapy phase 1 progress at IIT Kanpur. And can these individually become multi-therapy assets at scale?
Thanks, Sajal asking a very interesting question. As we are speaking, our associate company, ImmunoAct, obtained DCG approval to conduct a clinical trial for BCMA. So it is not a one-product company anymore. So they are going to start dosing the first patient in BCMA soon, and they are also starting to work on other clinical assets as well. So we are moving from one-product company to multi-asset company at ImmunoAct. Coming back to your question on IIT Kanpur, our commitment to progress the 3 assets what we are licensed from IIT Kanpur, we are progressing well, and we will have more to share about the timelines and all in the coming quarters.
That's helpful, Dr. Satya. And my second and last question is, given our reactors are interchangeable or fungible, we can always stop ARV and switch to NCE or higher margin product in the same block where we are currently doing ARV today, should an opportunity arise in future. So, I mean, logically thinking, instead of doing a 35% gross margin in a fungible reactor, we would rather do a 70% gross margin molecule. I mean, is that how you would think as well?
Currently, we are not struggling for capacities. So, and at the same time, ARVs, both APS and formulation put together is a sizable business. It is a cash cow, so we don't want to disregard that and then defocus. See, we have enough capacities to cater to NCE programs, Sajid. Yeah.
Yes, definitely. So we want, it's a cash cow for sure, but if there is a dramatic shift in the external environment, so, US pulling out of WHO, causing a near-term knee-jerk reaction on PEPFAR tender or on any such kind of a scenario emerging, we always have the capability and the capacity to make a different product in the same infrastructure. That's my question precisely.
You are absolutely right. It is definitely doable. If you look at our journey in the last 6-7 years, we used to make more than 1,000 tons of FY per year. Now we are making 50 tons per year. So that capacity converted to something else. So the reactors are fungible, as you mentioned. If there is a need arises, our ability to repurpose it to other APIs is quite possible.
Yeah, that's helpful. Thank you so much. I'm done. Thank you.
Thank you.
The next question is from the line of Tushar Madhudane from Motilal Oswal Financial Services. Please go ahead.
So just a bookkeeping question first. How much was the ARV formulation sales for the quarter?
You have a second question? We will answer the first question.
So with respect to this investment by 8 crores in the fermentation business, we were already implementing the capex for 2 million fermentation facility. So this investment goes into this 2 million facility, or this is separately 400 kiloliter capacity which we are going to come up under the deal with 8 crores?
Actually, the deal with 8 crores, we are not creating capacity for 8 crores. We are creating capacity for our own purpose. And we took the partner for their technical advice and their portfolio companies. But otherwise, the 400 kL capacity will come for bio. So we will do our own products. And going back to the first question, in the Q3, our ARV sales were a little over 300 crores, precisely 304 crores.
He's asking an FDF.
Yeah, 304 crores is the FDF ARV sales in the Q3.
Correct.
Okay. So sorry for this confusion, but the facility which we are building up, that is the 2 million fermentation facility, that is another project, and then 400 kiloliter capacity is another project. Is that the right way to understand?
Actually, if you look at our large-scale bio capacity, we have two large-scale capacities will come up, one in Vizag, one in Mysore. So both plants are intact. So we have accelerated construction of facility at Vizag because of operational reasons. But eventually we will also have another facility coming to Mysore. Both are active.
Got it. All right, sir. I have more questions. I will come back in.
Thank you.
The next question is from the line of Krish Mehta from Enam Holdings. Please go ahead.
Thank you for taking my question. I just wanted to follow up on the previous participant's question on the ARV versus non-ARV mix. Is it right to assume that your ARV total revenue for this quarter was 617 crores? Or if you could just break up the total ARV versus non-ARV?
You're right. That's about 619 crores. Yeah.
And if I could follow up, how do you see this trajectory going forward, as our API sales sort of stabilize a bit in the next, say, 1-2 years?
See, we can give you a broad range. We are not anticipating any growth coming from this franchise, both API and farmers put together. If you sum it up, it is 650 crores per quarter. We expect it will remain in that range next year after also. So that's kind of stabilization we expect in the ARV franchise, between 23 and 2500 crores, somewhere in between. Yeah. And we believe that's quite possible even now. Yeah.
Okay. Thank you so much.
Thank you. The next question is from the line of Bharat from Quest for Value Capitals. Please go ahead.
Hello. Hi. Good evening. May I know when is this bio-artery plant going live, sir?
By end of 2026.
End of 2026. Okay. And regarding this FDF 3 billion capacity for Karka, may I know by when this will be starting delivering revenue for us? From Unit 2, I'm talking about.
See, what we started doing validation of the products which will go into the increased capacity already. And then the new capacity will come from November, December this year onwards in a phased manner. Yeah.
Okay. And my last question regarding this US Biosecure Act. Now that this act is delayed, because of this, do you see any slowdown on momentum of the supply chain diversification efforts from innovators?
We haven't seen any degrowth in visits or RFP flow. Yeah.
Okay. Yeah. Thank you very much. That's it from my side.
Thank you.
The next question is from the line of Chirag Shah from White Pine Investment Management. Please go ahead.
Thank you. Sir, first question is on Q4 of current financial year. So last quarter, you indicated H2 margins would be around 25%, so that our annualized margins would be 20%. Now, we have done around 20% in Q3. So do you still hold to your H2 guidance of 25%? And if not, has there been any delay in Q3 revenue which lead to lower margins? That's my first question.
I think as I mentioned in the initial comments, we are still confident to what we are committed to bring the entire financial year EBITDA closer to 20%. Yeah.
Okay. And the second is for next year, FY'26, given the efforts you've been putting on CDMO over last 2-3 years, can we expect 26 could be the year of the breakthrough phase and we can cross or reach 2,500 crores of revenue?
I'm not able to comment.
There could be seasonality, but on a full year basis.
I don't want to comment on the quantum of business we do next financial year, but the prospects in the CDMO division looks very bright, and we expect to have growth.
And when you say growth, will it be substantial over FY'25? Because FY'25 has been a subdued year.
I think we'll reserve comment on this. So I can still say that the FY'25 will be a good year for CDMO. FY'26 will be an even better year for CDMO. Yeah.
Okay, great. Thank you. And margin guidance, any margin guidance you have for 26? Given
No.
there are lots of moving parts in the business.
We are not giving any margin guidance.
Okay. Thank you very much.
The next question is from the line of Jeevan Batwa from Sara Star Capital. Please go ahead.
Yes, sir. So, congratulations first to the entire team. So, we are seeing very good trajectory on the CDMO side. I think CDMO is going to fire from here on. That's what I feel. And Q4 and onwards, I think we will have a different numbers from CDMO. Just wanted to understand, and if you are able to give some details on this, any number of commercial molecules getting commercialized in FY'26. Any idea on that? In terms of also the animal health business, how do you see that animal health business is going to shape up, and also the agrochemical business, how is going to shape up in the CDMO side, I'm asking.
I think next year will be a good year for our animal health, so we expect significant growth will come from there. And we will commercialize our crop science facility, and we will also expect sales coming from that unit. When it comes to human health CDMO, we have a lot of clinical programs. I don't want to comment on how many we commercialize, how many we in phase 3. We never gave that number of breakup of programs, but we have a very good pipeline. As I mentioned, we are not offering RSMs or intermediates. So we moved one orbit and we are giving APIs and which are also volume and which are also complex APIs. So that's the game we are playing and we are happy. We have invested significantly in those and our customers are also very happy with what we are delivering.
Perfect. So no, sir, I also very happy with the numbers this quarter. I think next quarter is going to be really good in terms of CDMO. One more thing, sir, in terms of gene therapy, so we are saying we are going to commercialize a vector manufacturing facility in FY'26. So is it going to be utilized for contract manufacturing also?
Yes, you are right. So the facility will also sell GMP grade viral vectors and also we have the ability to do plasmids, CMO work and it will be a combination of both.
And how big it would be? How much we are investing there?
Our investment into GMP scale facility is about 130 crores. And we invest if there is a need. So, see, our initial philosophy continues to same. Invest ahead of the time and then we have licensed patents, we have licensed technology for viral vectors. I think as we committed, FY'26 we will have the GMP facility up and running.
Okay. So 100 crore is a big amount for, I think, this viral vector. So that's great, sir. That's great. And the last question, I think, little difficult question again. So when do you think, the kind of FY'21 kind of growth we can expect in the formulation and the API side? Do you think FY'26 will give that kind of growth in the formulation or it will be FY'27?
I think we are broadening our pipeline in our API and also in formulations. That will take some time. It will not be a quantum jump in FY'26, but the kind of pipeline we are developing will have unique offerings and we expect significant growth will come in the medium term. I don't expect significant growth coming in the near term, but medium term we are very confident.
So can we expect FY'27 to be the year for formulation and API?
We don't want to.
I think, see, we can discuss closer to when we are but filing DMFs in the new portfolio. Yeah.
Perfect. Thank you, sir. Thanks a lot.
Thank you, June.
The next question is from the line of Madhav from Fidelity. Please go ahead.
Hi, good evening. Thank you so much for your time. So I just wanted to understand that you mentioned that we've shifted from doing RSM and intermediate to doing high volume complex APIs. Could you explain a little bit more like what's happening? Is that customers are asking us to do the final API itself or sort of what's changed there? Just trying to understand the thought process.
I think when people come and they want volume, we're able to provide what volume our partners are asking and also what technology platforms we created also enables us to do complex things. We do significant work in flow chemistry, biocatalysis, high potent manufacturing, high energy chemistry, hydrogenation. So we created some technology platforms which helps us to add value to our partners' programs. So that's the reason we moved from RSMs to very advanced intermediates or APIs.
Is this a recent shift in the pipeline? Because if I understand right, 1 or 2 years back, we did do some KSM intermediates. So, this is the first time I'm hearing this shift. So is this something more recent that we've kind of realigned the portfolio or something which has been happening for some time?
We have realigned our portfolio. We are getting that kind of projects. I'll put it that way.
The progressive.
Yeah, it's a progressive. Yeah.
Okay. Got it. So just I had one request. Given a lot of your peers, they do give a breakup of, let's say we have 70, 80 human health projects. I think you do mention how many are commercialized. But if it's possible, just to give a breakup into different phases, like how many in phase 3, phase 2, phase 1? That will just be more clear for the investor community. So just a request from my side. Yeah. Thank you
So we, as I mentioned, Madhav, we don't want to dwell into finer details. See, this CDMO business is very dynamic in nature, and we don't want people to start guessing projects and all. So we also have confidential agreement. We don't want to reveal too much. So when it is commercialized, people know very easily on the export data nowadays. So people are dissecting so much. So we don't want to give more data further. Yeah.
Got it. As just the last question from my side was the KRK JV which we are implementing. I don't know if you've called it out before, but how much capex are we putting in for that JV? And sort of in 2-3 years, what kind of revenue can come from that JV separately? If you could give us some sense, that will be really helpful. Thank you.
I think we are formulating our strategy correctly right now. The blueprint stays on the facility and also products. Maybe we'll be able to give more details maybe middle of next financial year. Yeah.
Understood. Thank you.
Thank you.
The next question is from the line of Deepak Malik from Carnelian Capital. Please go ahead.
Yeah. Thank you for giving the chance, and congratulations for a good set of numbers. Sir, my first question is on the CDMO business. Can you please highlight what drove this strong growth in this quarter? Is it like human CDMO, or was it animal in this quarter? So what actually drove the performance, and is it sustainable for quarter 4?
I think the growth came from both human health. Majority came from human health, but partly also came from animal health CDMO. And we expect our pipeline is robust, and we are also doing very late stage intermediates or APIs. We expect we continue to do well in this division, Q4 and beyond.
In this human health and animal health, has there any new capacity which gone into commercialization, or was it a new product which got launched? So what actually, if you can give a little more color exactly, so what exactly led to this kind of strong growth? Launch of new products, commercialization of new facility, or ramp up of existing contracts, or whatever?
I think no new capacities came online. We have a lot of capacity which we have created for this division, and we started utilizing, and we are delivering some projects which we delivered small quantities in the previous years. So it is a gradual growth. So this business, one has to have a lot of patience, and we patiently waited for the programs moving from earlier clinical phase to late clinical phases, and this growth is effort what we have put in the last 2 years.
Okay, sir. Okay, got it, sir. And you think this is something which will further scale up going forward from Q4 and Q1 and Q2? So this is like just a start, and then things will further scale up from here onwards.
Year on year, yes. Yeah. We expect this division will grow in FY'26. I will leave at that stage. I will not quantify how much growth comes right now.
Yeah. Okay. And second, sir, you have given one very good slide in the presentation, the 7th number slide, where you have given that there is a 3,000 crores of total capex from FY'22 to 25 you have done, and in that around 72% capex is into the API and CDMO. And then you have given the breakup also that, okay, there is a 50% which is ongoing capex, and the operational is only just 21%, and ramp-up stage is only 28%. So that means like more than half of the capex is still not commercialized, and that is still to come in this 3,000 crores. Only 1,500 crores is something which is in the various stage of scaling up.
I think I'll answer this question a little differently. See, the capacity is there, but we are not doing regular production there. So when we do scale-up batches or validation batches, multi-stage, so utilize your block very inefficiently. So the real value comes when we do commercial value.
Okay, sir.
So, yeah.
Okay, got it. And in this, so if I have to say that, so approximately what kind of sale must be coming in from this 3,000 crores? Is 1,000 crores or maybe even less than that?
We don't want to quantify that way, but on the left-hand side, you might have seen, at the highest, we have done 1.4 asset turnover ratio. At the lowest, currently, we have 0.8. So when we go commercial, I think revenues will be somewhere in between. Yeah.
So you have given there that it's 0.8x. When you say 0.8x of the overall 3,000 crores, or is it just the one?
Overall gross block, including 3,000 crores.
Okay, got it. And whatever capex which will be coming in going forward, that will be over and above this.
Yes.
Okay. Thank you very much, sir.
Thank you. The next question is from the line of Venkat, an individual investor. Please go ahead.
Thank you, sir, for giving me this opportunity. I just wanted to know, what is the impact on ARV business that US withdrew it from WHO?
WHO is a policy framing organization. WHO don't fund any ARV procurement. They do make policies. They do approve the dossiers, guidelines, and all. So, if the US are moving away from membership of WHO, will have some impact on the guidelines, approval timelines of files and all. But in the near to medium term, we don't expect any impact on the drug purchases, because the amount of money spent on drug purchases is 10% of the money spent on the HIV eradication program. So we don't expect significant impact on that.
Okay, sir. One more question. Sir, earlier when we purchased Richcore, we thought to put up 2 million fermentation facility in Bangalore. Why was it moved to Mysore, sir? Just try to understand.
We have used Bangalore as a word, but otherwise our initial plan was to put up a facility near Tumkur or Mysore. So that was the idea. And we moved the phase of construction to Vizag for operational reasons. So our plan of creating large volume facility of 2 million liters still intact. Yeah.
When is it expected to complete, sir?
The Vizag facility will be operational by end of 2026.
Oh, it's going beyond the end of 2026 in Mysore time, right?
Yes.
Thank you, sir. All the best for future growth. Thank you.
Thank you.
The next question is from the line of Mayur from Wealth Managers India Private Limited. Please go ahead.
Good evening, sir. Thank you. I hope I'm audible.
Yes.
Sir, just one broad question, and it may appear to be little financial, but I think from a strategic standpoint, the stakes, 8 road stake, 14%, when we look at broadly, the value comes to around 850, 860 crores for the overall Laurus Bio. And when we look at the annualized current revenue run rate, it is just slightly sub of 200 crores. Our own entire Laurus is valued much higher than that. And we believe, the bio segment supposed to be much more high, should have been a little more qualitatively more higher valuation if it commands, so to say. So just wanted to understand your thought process when we looked at this, and what kind of benefit shall it accrue, and is it the right way to look at, and what are your thought process as when we looked at that kind of an arrangement?
The primary objective for us to bring Fidelity as a partner is to work closely with their portfolio companies across the globe. That's the primary intention. The second is, you might be aware, we acquired majority of the bio stake from Fidelity itself. So they are coming back itself is a good indication that they see value right now into this. Not just money purpose, we got to Fidelity into the picture to broaden our management bandwidth there, and also work with their portfolio companies. I'll put it that way.
But the valuation is it's a fair valuation. It's not that. In fact, the same valuation even Laurus also investing.
Yeah.
So we will invest around another 40 crores by before end of June 2025.
Right. And we further have both either of the partners at 35 crores additional. That is also at the similar valuation?
Yes, you're right.
Oh, okay, sir. That's it from my side. Thank you and wish you all the best.
Thank you.
The next question is from the line of Ankur Bedekar from ULJK Financial Services. Please go ahead.
Hi, sir. First of all, congratulations for the good set of numbers. So a couple of questions from my side. One was, during the quarter, the Onco API contribution has been low, around 8% or so. So wanted to know the reason behind the same. And also, do we still hold a higher market share in the gemcitabine API?
If you look at the 12-month period, answer is yes. Not quarter on quarter, answer is yes. And for many of the oncology APIs, we hold significant market share. And see, it is kind of some kind of a order book shifts from quarter to quarter. Otherwise, our onco pipeline looks healthy.
Okay. And how do you look at the business going forward in terms of the bio business, with 8 roads coming in? What is your future growth strategy? And how do you see the contribution from the bio business going ahead?
I think we will be able to answer that once our new additional capacity comes online. See, until such time, we are only debottlenecking existing capacity. We don't expect FY'26 will see significant growth in bio. So the quality of business may vary, but quantum of business may not be very significant in FY'26. But year after, we'll see a big growth in the bio division. But we are not quantifying how much we'll do in FY'27 and onwards. But we see growth there.
Okay, that's helpful. Thank you so much.
The next question is from the line of Dheeraj Kumar from Tankia Wealth. Please go ahead. Dheeraj Kumar, your line has been unmuted. Please go ahead with your question.
Hello, sir. Am I audible?
Yes.
Yeah.
Yes, sir. So my first question is around, I hope we supplied registration batch in Q3 and we are doing in Q4 as well. So my question is around, and I'm not expecting any number, but my question is around, are you supplying more than for one product or molecule for this Q3 and Q4, or it's for one product or molecule?
I can give broad answer. So this is the deliveries what we have done in Q3 and what we are going to do in Q4 are for multiple products, not for one product.
Okay. Then we are good. In 2021 we supplied PO, and that's the only one product. And when it vanished, our revenue has been significantly declined. That's why I asked. Thank you.
So there are multiple products. Yeah.
Okay. Thank you. Yeah, that's it from my end.
Thank you. Interesting question. Yeah.
The next question is from the line of Nitin Agarwal from DAM Capital. Please go ahead.
So thanks for taking my question. Sir, on the CDMO bit, in your presentation, you mentioned that you're working on 70 plus projects, including several breakthrough designated molecules. So from a CDMO partner perspective, is there any implication we should read into this designation of molecules as fast track, as breakthrough or molecules? Does it have any implication? What implication does it have as a CDMO service provider?
The approvals will be faster for our partner.
Okay. And you mentioned that there are multiple of such products which are there in a pipeline.
Yes. Yeah.
Okay. And then is it typically such molecules would be what class? Typically the orphan drug molecules with smaller sort of scales, or these are not necessarily orphan drug products? It's typically in such designations.
I think I will not answer this question. Yeah.
Right. And sir, the other point that you mentioned on the ecosystem for CDMO, sir, I mean, some of the trends that you mentioned, I mean, how are they I mean, what implications do they have, positive or negative for you, for Laurus as a business? You know, in whatever changes that you've seen in the landscape over the last few quarters, and the things that you had things that you're seeing changing for now?
I think it's there are changes, but those are all positive for us.
I mean, the point that you mentioned about supply chain optimization by big and mid-sized pharma, I mean, what kind of changes are you seeing on that account, sir?
I think they are trying to add some key vendors to diversify their supply base. Yeah, that's what is happening, and we're happy the way things are going right now.
Okay. And the last question, what kind of programs do we have for the peptides, the various kind of peptide drugs? They are right now the big talk of town in terms of GLP-1s and the other sort of products. What kind of capabilities do we have on peptides, and how do we see that part of our business scaling up?
I think, we are not giving what products we are working, what therapies we are working, we are not giving. So, that's giving too much of details. We don't want to give very minute details, which is against our policy now.
Okay, sir. Thank you so much.
Thank you.
Thank you. Next, we have a follow-up question. It's from the line of Tushar Madhunane from Motilal Oswal Financial Services. Please go ahead.
Yeah, thanks for the opportunity again. So just on the CDMO or the custom synthesis space, if you could just clarify, this is like more of the exhibit batches traction which has come in this quarter, or this is like subsequent to product approval, the initial build-up commercial activity that has driven the custom synthesis business quarter-over-quarter?
We supplied one commercial launch quantity and multiple registration quantities.
So the commercial size, given that this is more liquid.
Tushar, is not audible.
Yeah, sorry. Am I audible now?
Yeah.
So this commercial build-up activity will then probably take a breather, and then drive the business, or this is more like a sustainable number to work for?
The commercial API, what we supplied in this quarter, will continue to be there. We know the forecast. I think that's good for us. And there are several, as I mentioned, the growth doesn't come from one product. Growth came from multiple products. So we're happy that our CDMO division also well diversified. Yeah.
Understood. And lastly, when do we see pickup in the formulation business per se, where, we've seen certain products filed up to approved or subsequent launches?
I think overall our formulation division grew this quarter, and we expect it will do well.
Great, sir. Thank you.
Thank you.
And all the best.
Thank you.
The next question is from the line of Sajal Kapoor from Anti-Fragile Thinking. Please go ahead.
Yeah, thank you for taking my follow-up. Dr. Satya, culture is always the hidden factor in delivering high science and innovation, and I'm sure you know that more than anyone else. And according to some empirical studies, employees who eat together and engage in social activities out of their labs and workplaces, they tend to perform better at work. So, I mean, this is in the context of, this mushrooming of life sciences global capability centers around Hyderabad. I mean, do you think this poses a threat in terms of attracting or retaining talent? And if yes, what is Laurus doing in terms of, culture, work-life balance, and creating a more fun at work kind of a climate for disruptive innovation to foster? Thank you.
I think, at Laurus, most of our mid to senior leadership feels this is their company because we gave liberal stock options. And also, since any employee spends significant time in the office, unless workplace is happier, the organization will not be happier. We put a lot of effort to make the workplace an happier, safer place. And most of the time, senior leadership thinks about how we are helping our colleagues to do their job better, happily. And we, as I mentioned, we also moved from employee well-being to family well-being. We do a lot of programs for not only employees, for their kids, for their spouses as well. So we think we are treating our colleagues as a bigger family.
That's helpful, Dr. Satya. So in terms of our recent R&D, so this new R&D center in the Genome Valley, given the mushrooming of these GCCs, I mean, was there any sort of a struggle or we were finding it difficult to attract the kind of talent that we were looking for that new R&D center, given, what all is happening in Hyderabad? I mean, there's far too many CDMOs and GCCs in the region. Have you faced any sort of difficulty or employee attrition on the R&D side?
And it's a very interesting question, sir. You see, when it comes to global capability centers, they are more on regulatory, IT, back office kind of, which Laurus is not part of any of the programs. When it comes to other CROs, CMOs in the region, I think your point is valid. It is a challenge we have to overcome when we do that effectively. See, the kind of recruitment drive we do, the kind of opportunities our colleagues see, I think we are happy to take that challenge and then recruit right talent.
Perfect. That's helpful, Dr. Satya. Wish you all the best. Thank you.
The next question is from the line of Bharat from Quest for Value Capitals. Please go ahead.
Hello. Hi. Thanks for taking my follow-up question. Regarding this PEPFAR tender, sir, I think it's for 3 years. May I know when is it the current tender getting expired?
I think Global Fund tenders are for 3 years and they started last year. So it continues for 2 more years.
Okay. So, and the next tender cycle is from 27 then, is it?
27, yeah.
Yeah. And may I know the split of this 531 crores for this API? Can you please give the split up between ARV, Onco and other API?
The ARVs is 315 crores.
Okay. And Onco and other API?
216, yeah.
Okay. Yeah, thank you.
Thank you.
Yeah, that's it.
The next question is from the line of Mallar Sanghavi from Bodhi Capital. Please go ahead.
Yeah. Can you hear me? No, audible? Yeah. So first of all, congratulations on a good set of numbers. So my first question is, are you planning to reduce the capex and let
I'm sorry to interrupt, Mr. Mallar. Can you please use your handset and speak?
Is it better now?
Yeah.
Yeah. So the question was, are you planning to reduce capex because it doesn't end of this year? 11% last year, 14%.
Sorry to interrupt. Mallar, your voice is cracking. Can you please rejoin the queue again? The next question is from the line of Chirag Shah from White Pine Investments. Please go ahead.
Yeah, thanks a lot for giving the opportunity again. Sir, I have a question on CDMO again. Sir, if you can just highlight the predictability of the revenue of CDMO versus it was a bit more volatile, at least on quarterly basis. So what is the change or the nature of the CDMO revenues that we'll have which will make it more predictable versus the past? It will be volatile, I understand that, but I'm just trying to understand, is there a major change in the nature of CDMO revenue stream? We did 400 crores, for example, and looking at the synthesis business all together, 400 crore in Q3. If we take that as a base, how should one look at the predictability going ahead of the CDMO business?
I think, as I mentioned, the pipeline in our CDMO business is robust, and growth came from multiple projects, not from one. And we have a large number of clinical programs running. So I think all of us are aware it is absolutely impossible for all programs to succeed. It is also difficult to guess all programs fail. And these are coming from multiple big pharma for us. So we believe the chances of success of our CDMO pipeline is very high right now. Because of the therapy areas where we are involved in those programs, we expect the chances of success is bright. I'll leave at that stage. Yeah.
So is it right to persist the history if there is much bigger pipeline executing at the same time, and probability of those achieving success is also higher versus the past, and that will bring a bit more predictability versus our past. That is the right way to understand?
You are right, absolutely. So, yeah, see, previously the large PO came and then after that there is a gap. Now, so what with this growth, we believe is sustainable growth. Yeah.
Okay, thank you.
Thank you, madam. Yeah.
The next question is from the line of Vivek Agarwal from Citigroup. Please go ahead.
Hi, thank you for the question. So the question is on 4Q NCE product deliveries that we were talking, right? So any deliveries happened in 3Q as well, or it is going to be completely the new supplies that are going to reflect in the 4Q on top of what we have done in 3Q?
It's a combination. Yeah. So, yeah.
So some part of supplies you also made in 3Q as well, right?
Yeah. We do more products in Q4. We continue to augment our supplies of the launch quantities what we gave in Q3. We continue to do in Q4 as well. So I think I would say the pipeline is robust. So yeah, we're happy our efforts came to this stage. Yeah.
Thank you, Satya. So just one more question on the 6 ongoing growth projects that you're talking about, including 3 small molecule, 1 drug product, and 2 CGT. So is it possible if you can give some more color on what stage these products are, whether it's a phase 1, phase 2, late stage, or either filed with the FDA, etc.?
In the generic portfolio, 2 products approvals we expect in this quarter or next quarter, so we hope to launch those. And in CGT is very early for us to give any guidance and because our facility only coming up in FY'26, GMP facility. So I think our CGT, we're only investing, nurturing that, and I think we're happy for the investment what we're doing. As we mentioned earlier, our commitment to put about 120 crores in the facility itself is a good commitment, and we're happy to do that. And we believe our facility will cater to not only for the viral vectors, but also the ability to make plasmids for others.
Thank you, Satya sir. And just one more, I think, the repetitive question. Earlier participants have also asked, I think. It would be super helpful if you can highlight that how many new products that you see that can be commercialized in the next, let's say, 1 year, or even if you can give a broader range, let's say that in the next 3 years we are going to commercialize this number of molecules, especially in the CDMO, that would be super helpful.
I think it's difficult to give that, but yeah, it's difficult to give that number. Yeah.
No problem at all. Thank you. Thank you very much. All the best.
Thank you.
Thank you. Ladies and gentlemen, this will be the last question. It's from the line of Mallar Sanghavi from Bodhi Capital. Please go ahead.
Am I audible now?
Yes. Yeah. Mallar, very audible now.
Great. Yeah. So my question was, in the presentation you mentioned that there are around 2,600 scientists and around 1,250 R&D scientists. So I just wanted to know if you have front-ended the hiring and we can handle much more amount of molecules than we currently have the same number of team.
That is the intention. We opened a new R&D last quarter, and that R&D is as big as our current R&D. And currently, we are not doing much early phase programs because of our late stage programs are taking away a lot of resources. So we will offer more early stage work that will also fill our pipeline. We are augmenting and we'll augment further our scientific talent to take more clinical programs.
Right. Thank you. And one more question. Are you planning to reduce the capex going forward in the next couple of years? Because that's been the trend over the last 2 years. So is it going to continue?
I think capex-wise, if we see an opportunity to invest, that's the way our philosophy, and we continue to do that. If somebody comes and looking for a project, we're happy to invest.
Right. Of course. Perfect. Thank you so much, sir.
Thank you. Thank you, Mala.
Thank you. Ladies and gentlemen, that was the last question for today's conference call. I now hand the conference over to the management for their closing comments.
Thank you, Nitin, for organizing this call. And also, thanks for all the participants of the call for their outside-in view. And some of the questions asked by you are very thought-provoking and also help us to guide our business forward. Thank you.
Thank you.
On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.